Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's have a look at how the local bourse closed today, Thursday. All right, local shares extended its gains today, advancing more than 8%. It's a three-day rally now for Philippine stocks after rising by 1 3/10% today to 6,581. That's on expectations that the central bank in its policy meeting today will maintain a dovish tone, keeping benchmark rates unchanged, a direction seen to at least help bolster the country's economic recovery. Mizuho Bank said the BSP is likely to hold on to an accommodative policy condition as the economy deals with a resurgence in COVID-19 infections as well as a slow rollout of vaccines. Now, all 23 analysts surveyed by Bloomberg project that the BSP is likely to do just that as it waits previous easings to actually filter through the economy while keeping an eye as well on any spillover effect from quicker inflation. The index for the past 3 days at least has risen by as much as 2 9/10%. Unicapital's Justin Tempravilla said that while increasing infections is driving a cautious sentiment, investors are on bargain hunting mode for stocks with attractive valuations. True enough, looking at today's leaders and laggards, 21 stocks in the main index capped off the day in the green, with 4 stocks gaining at least 3.9%. We have their JG Summit, as well as Ayala Corporation, SM, as well as SM Prime, giving the biggest push today. JG Summit is a day's biggest winner, up 5 4/10% to 61 pesos and 80 centavos a share. Now, if there's a stock that's really enjoying a rally, that's definitely going to be Puregold here. Now on a 6-day stretch of gains here, after rising today by 1 4/10%, it posted better than expected earnings in 2020 with a 19% jump in net income to 8.05 billion pesos the past 6 days. The stock has gained over 19%, its longest winning streak yet since July 2019. Puregold now at 41 pesos a share. And a quick look on one final stock here, that's Semirara. The miner eked out hefty gains today after the Energy Department slashed its penalties against the miner. According to their disclosure, their fine for a violation in coal trading back in October 2019 was cut by more than half. Now, the 1-month suspension of its accreditation as a coal trader has also been lifted. That bit of development pushed shares higher by as much as 13% earlier, but those gains somehow tempered a bit, ending the day up 11% to 13 pesos and 32 centavos a share. Here are other headlines we're keeping our eyes on. Economic managers insist the country can no longer afford wide-scale lockdowns to curb virus transmission. NEDA Acting Secretary Carl Kendrick Chua re-emphasized the need to utilize localized lockdowns to retain employment and keep surviving businesses afloat. Trade Secretary Mon Lopez likewise insisted that a surge in infections isn't linked to economic reopening, saying cases remained steady late last year, even as government eased restrictions. Chua stressed other concerns that need to be considered in deciding lockdowns and restrictions. Here's what he had to say.
Now is not economy versus health. It is the total health of the people, whether it is from COVID, non-COVID sickness, or hunger.
Now, after pushing for direct procurement options for the private sector, the Philippine Chamber of Commerce and Industry clarified that the burden should not fall on small businesses. The government has since remained firm that any vaccine purchase made by the private sector should be coursed through government under a tripartite deal. Business groups, however, flagged the slow process in acquiring shots.
Our memberships, ito are MSME, maliliit na negosyo. Although we count as part of our membership the huge conglomerates, pero 95% are small businesses. They said, "Sir, wala na nga kaming pangsweldo kami pa ang bibili. Pagkatapos yung bibili namin, hahatian pa namin. Anong bang klaseng usapan yon?" So they were not really happy about the situation that was being offered?
The government is looking to tap the World Bank for a 9.7 billion peso loan to address malnutrition in the country. This is according to a document from the multilateral bank. The World Bank noted that 30% of Filipinos under 5 years old are stunted to date and that 19% are underweight. The lender added that high levels of childhood undernutrition in the Philippines, despite decades of economic growth, could affect the country's human and economic potential. With NCR and nearby provinces in the middle of a bubble, how might this impact the country's recovery from a recession? To share his insights, we have ING Manila senior economist Nikki Mapa. Good afternoon, Sir Nikki.
Good afternoon. Thank you for having me.
Okay, so the country, as it is, still struggling with the pandemic. Now we find ourselves with a return to stricter mobility curbs. How does this change hopes of an economic recovery?
Yeah, well, with the return to some form of stricter lockdowns, although authorities continue to maintain it's not a lockdown, but I guess the shutting of certain services, as well as the general impact on consumer confidence will be felt. Originally, we had expected GDP levels to return to 2019 base case next year, third quarter. With the 2-week lockdown, maybe even longer, we're now seeing the return to 2019 GDP levels all the way back to fourth quarter of next year. So it will be a bit of a delay for the economic recovery, but I guess this was the right call given the immense need to get a hold of this virus. We've said it before, the health crisis and the economic crisis are intertwined. If you don't get a handle on your virus, you don't get a handle on the economic recovery. So this was, I guess, a good move to try to limit the number of infections before it gets out of hand.
Okay, it's anybody's guess at this point if this would really end by April 4 or if this will extend. How do you see this at least affecting our figures? We are expecting this to at least feed into the first quarter GDP as well as second quarter GDP figures.
Well, GDP growth this year, of course, is going to return to expansion by the second quarter. Some sectors were at least hoping for a positive GDP number by the first quarter, but I guess this latest development sort of, all but ensures that we'll have 5 straight quarters of contraction. But we will have some headline-grabbing, nice growth numbers by the second quarter. However, this will be more of a virtue of our more than 16% drop in GDP last year. So on base effects, we will have some GDP growth by the second and third quarter. However, if you look at the sort of the state of the economy and I guess the momentum, we can really say that it's slowed down from what we're used to, the 6% growth pace that we enjoyed prior to the pandemic. So the latest bubble scheme is definitely going to take a hit on our growth numbers, and all the more, I think, more concerning. The longer we remain in lockdown, we start to see the scarring effects of this pandemic. More and more jobs threatened, businesses going out due to the stoppage in economic activity. So it's going to be a very tough uphill climb for the economy. Definitely need more stimulus. That's one thing that we've been expecting or hoping for, given that the economy seems to be stalled as of the moment.
Well, we've heard economic managers time and again say that they're going to maintain fiscal prudence. Should they take on a different stance now, given the recent spike in cases?
Well, yeah, that's been their strategy all throughout. They were highlighting that this will be a marathon, not a sprint. They need to conserve all their ammunition for a long haul. One thing I'd like to highlight there is if you don't knock out this virus sooner rather at the soonest, you tend to have a longer drawn out crises. But if you have a substantial boost in spending, if you can knock out the virus by throwing money at the problem and as well keeping the economy afloat through cash transfers and maybe some grants to businesses, I think that's the playbook, or that's the strategy that other countries have employed. And look, we don't have to look very far. We don't have to go to the US. We can look at our regional peers. They're all exiting their recessions in the near term, while we continue to sort of struggle to get past this current wave that we're faced with.
So are you saying now is the right time or the best time at least to come up with a biennial 3?
Well, I think the best time for that was last year, but we can't have any hiccups on that. We need to get this stimulus out. I think there was another package that's being proposed by Senator Pacquiao. Definitely, this economy is in need of a boost. I'd like to, sort of equate it or to liken it to a car that's been stalled. We need a jump start of this car that's been, idle in the garage for many months now. And the sooner we get that car up and running, it can recharge the fiscal batteries by when there's increased consumption, there's increased revenue collection. So that's something that I think fiscal managers have to look past right now. I mean, fiscal metrics are important, don't get me wrong, but at this moment, the more important, more pressing issue is our economy continues to be mired in a recession, and if we don't get out sooner, I think the scarring effects will continue to weigh us down and hamper our growth momentum for years to come.
And lastly now, Sir Nicky, of course, we are expecting a decision from the BSP this afternoon. What are your expectations here?
Well, yeah, I think market is expecting a pause from the BSP. BSP Governor Jokno telegraphing his move, saying that we'll likely see the BSP not change policy despite the uptick in inflation. They would like to look past that recent uptick in prices, knowing fully well that any monetary, tightening would not address the price issues. Secondly, they are also cognizant of the fact that the recession continues to bite, and hiking at this stage will definitely do more harm than good. They're just sort of hoping that the fiscal measures or the supply side measures that the national government have put in place will help bring down prices, and BSP trying to provide as much stimulus as it can to this fledgling recovery.
All right. Thank you very much for your insights this afternoon. Again, that was ING Bank Manila Senior Economist Nicky Mapa.
Take care, stay safe.
Thank you. And those are the biggest news this trading day, March 25, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.